Good morning and welcome to my CEO interview on Core Finance. My guest today is Andrew Knott, CEO of Savannah Energy. Good morning, Andrew, and great to see you again.
Good morning, Malcy. How are you?
I'm very well. As ever, it's been a very, very hectic time. You're working very hard. You're putting a lot of things together. A quick overview of what's been going on before I duck into some of the detail, if I may.
Yeah, no problem. So for those that aren't familiar, Savannah is an African-focused energy company. We have current operations in Niger and Nigeria. Both of those projects are very meaningful. The Nigerian project supplies up to 15% of the country's power generation capacity. The Niger project, when it comes on stream, will be part of a wider project which should increase the country's GDP by 24%. And then in terms of you're asking for, I guess, well, what's going on? So in Niger, we've just extended the PSC by 10 years, which is a major positive. It gives us certainty around the investment environment and the ability to then to go and progress the R3 East development and to embark on a decent exploration campaign. And then in Nigeria, we're currently drilling the Uku 11 well, which will increase the productive capacity of our assets quite significantly. And also provide redundant capacity and maintain our ability to be reliable. And then we've also announced that we're acquiring ExxonMobil's assets in Chad and Cameroon, our intention to do so. So there's a lot of work going into that. I should just step back. In Nigeria as well, obviously there's the new customer work, which I'm hopeful very shortly we should have news on gas sales to new customers. So yeah, you're right, there's a lot going on.
Good. So you're in Chad at the moment, I can see, and I know that there's not very much you can say, but I'd love to have a bit of background on the proposal that you put forward to ExxonMobil, and you know, as you sweep across Africa, how it's going to look out for Savannah.
Okay, so in terms of, I'm limited by what I can say for regulatory reasons, unfortunately. But we've already put information around sort of gross size of asset and pipeline and all the rest of it. What I would say from an upstream perspective is broadly a similar size development to that which we have in Nigeria. And then the pipeline, we've said, transports over 100,000 barrels a day of crude. It takes on a significant amount of third-party crude from CNPC, from OPEC, and on and off in the past from Glencore. So you have a pipeline asset and you have an upstream asset. We are actively working our way through the transaction with the potential transaction with the vendor. And obviously we have, when we are ready to be able to explain everything that we're doing to the market, we'll release that in full, and then our shares will recommence trading. But I can't, as much as I would like to, I can't really give more details than that, but we're working on it.
Does it make any difference to the work you've been doing in Niger and Nigeria, or is it just effectively a good standalone business?
I don't really want to talk about how it all fits together, but
I understand.
But I mean, I think you can the Nigeria, you've seen that we're moving along with our work streams. You've seen we've now signed the PSC in Niger and with an intention of recommencing work. So the other businesses are moving ahead and will continue to move ahead.
So you've had results today as well. You've shown your cash generating ability, a great operational performance, increase in production, and an entry into the CNG market. Any comments on today's figures?
Yeah, look, I mean, I think if you look at the trend since 2019, we've increased the cash collections in the business by 84%. We've increased production by 25%. Since we announced our intention to acquire the assets, production increased by over 50%. So really, what we've shown is that in Nigeria, as we did in Niger, we can operate assets and add significant value. In Niger, we've drilled those 5 exploration wells, we've made 5 discoveries, put in place the R3 East development scheme. In Nigeria, we've acquired assets, we've added customers, we have improved efficiency, improved the cost structure, and improved the overall production in the assets. So I think we've proven as a company that we do what we say we're going to do. And yeah, so I mean that's really the essence of today's results. I would say they're solid, they're robust, they're strong. As we and it demonstrates this $4.3 billion base case revenue stream that we have contractually signed up for from our existing customers, and the reliability.
Okay, let's take for no other reason than Niger first. You've got the PSC amalgamations, and people will be able to see in the line of sight of work on the ground. Yeah.
Yeah. So what we've done is we've combined all of the previous PSCs into one. So what that does at a high level is it means that we are able to recover costs from a development against wherever we spent the money, whereas before we're even restricted block by block. And then secondly, it means that our work program is dictated by the best project for us and the best project for all of our stakeholders, the government, local communities. We're not going to have to drill a well somewhere like on a second best location because it was a contractual commitment. No, we can drill all our wells in the best locations possible. And then obviously we're getting another up to 10 years to go and prosecute an exploration work program, and then 25 years to exploit a discovery. So it really is a great framework for us to be operating in. It really encourages us to post the recommencement of trading of our shares to proceed with the R3 East development and then some additional exploration activity. As you know, our track record there has been great, very high success rate, 100%. The basin-wide success rate is 80%, and we've got over 150 exploration prospects in a 35 million barrel development, which we've worked on now for a long time. So, and when it comes on stream, we'll deliver significant free cash flow as anticipated. So, really, Niger is a very straightforward place to work. It's been a lot of fun for us, and I expect us to deliver a lot of value through that.
People will be excited about that because, as you know, we've been waiting a long time, and because you've had such success there, it'll be great to see some work on the ground in Niger. So that's going to be great for the company. Let's move over to Nigeria. You've got a number of things on the go there. You've had a good operational time, as I mentioned before, and you've got the CNG, and you've got the new Petroleum Industry Act. So are you going to bring other people up to your level of operational quality and observance of things?
So I think the Act is one of many things which have been put in place by the Nigerian government to support the gas to power industry. So before we talk about the Act, if we go right to the end customer, there's been a significant effort to start metering power. And what that means is that, and that has increased cash collections at the customer level very, very significantly. Then on the transmission side, so once power is generated, it needs to be transmitted to the end user. There's been a very significant project managed by Siemens to upgrade the quality of the grid in Nigeria. Then you look at what's happening in the power generation sector, where there's a very large privatization program which is ongoing. The history in Nigeria across all industries really is when assets get privatized, they perform better, as most privatizations anywhere in the world show. And then in the upstream, you've seen the fiscal incentives with the reduced royalties in the PIA. So what you're seeing is an easier fiscal regime for gas development, a more motivated power sector to consume the gas, a grid transmission system, which is expected to receive and is receiving a significant upgrade, and then a liquidity injection through the metering and increased payments from customers. Also, not our customers, when I say that, I mean the power. Separately, there's been significant developmental finance institutions investment in the sector, which again has provided additional liquidity. So I would say in the gas, from a pure gas perspective, there's a relatively joined up approach in Nigeria now to the value chain and making sure, firstly, it works the best to the best it can, and secondly, that it will stimulate incremental investment to give Nigeria the power that it really sorely needs.
You and your team are really confident that now that you've refocused your sustainability strategy, it's of significant importance. And having read through it, I can see you can. Would you like to have a chat about that?
When we think about sustainability, I think our thoughts are really summarised very well in 3 parts of the annual report. First is my chief executive's letter. Second is the market context section, which was guest authored by Dr. Richard Norris, who's a leading expert on energy sustainability and climate change. And then thirdly, our actual sustainability strategy, which we should discuss. I think whilst there's a lot of ideas in those sections, our core thesis or the core arguments that we point out are that in the context of Africa, what is absolutely critical is that the continent is allowed to develop economically. And for the continent to develop economically, it has to have power. The R squared between economic development and power consumption is 0.82, which essentially means you cannot have one without the other. So at the top, you have America, et cetera, et cetera. At the bottom, you have many of the African countries, those which we operate in, those which we hope to operate in. And really, it's not just straight economics, like poverty that gets alleviated. Health outcomes improve dramatically. Life expectancy increases. The issues around illness improve dramatically. So full stop quality of life just improves when you have access to power. So what we believe really very fundamentally as a business is, in a world where the cheapest form of power is hydrocarbons, in a world where 82% of all power is generated by hydrocarbons, and in a world where 35% of that is coal, you need to be realistic about how you do the transition. Even when you look at the most optimistic views on technological adoption, technological invention around decarbonisation, you're looking at 35% in 2050 of a net zero scenario being derived from hydrocarbons. So it's really important that we look at how we decarbonise the existing projects that we have, so how we can produce the existing hydrocarbons in a less carbon intensive way. And it's really important that we allow, if the ultimate goal of sustainability is to improve human quality of life, that we allow the development of especially gas to facilitate the improvements that will change many millions of people's lives in the most cost-effective way. So within that context, and there's a lot more detail in the annual report, I'm just really summarising and skimming the edges of the issues and that are relevant here. Because climate change is important to be dealt with, but it's much more important in the context of Africa to alleviate people from poverty, for sure. Then we think that we have a very, very important role to play. We're playing a very, very important role in that, and we're investing capital and doing projects that in areas where it's hard to mobilize capital, it's hard to get these projects going, and you therefore make a much bigger difference. So around that's the sort of the corporate view, and it's held by our people very, very strongly. But in terms of the sustainability strategy, what we've done is we've aligned what we do around the UN SDGs, Sustainable Development Goals, and then we've mapped out how that impacts various other frameworks, because one of the things about sustainability is there's no commonly accepted framework. There's many frameworks, different people look for different things. And that's essentially what we've done. We'll have a full reporting framework in place for 2022 as our ambition. But what I would say just now is the starting point for Savannah is exceptional. We have, from a carbon intensity perspective, we are half as carbon intensive broadly as the global energy industry, and we've reduced our carbon intensity at roughly twice the rate that the global industry did last year. So we're in a good place from a carbon intensity perspective. From issues like diversity, 35% of our senior managers are female, for example. From an HSE perspective, we have top 2-3% performance in the global industry. So again, across all those metrics, we are there. What I would say though is that that's the way we run the company. So like I wouldn't say that we've consciously said, okay, we need to do this, we need to do that. What I would say is that in the case of hiring, we hire the best people, period. And that's how, and then the statistics become the statistics themselves. In the case of HSE, like clearly that is like that's not a negotiable thing. So we run our business in a safe and compliant manner. That should be a given. So and then on carbon intensity, clearly we're always seeking to produce in the most effective and efficient way we can. So I mean, that's a relatively easy question. We take these issues seriously and we're doing it. It's integral to who we are.
Well, thanks very much for putting that across so well and in such difficult circumstances. And you know, I appreciate that it's going to make Savannah an important and powerful vehicle in country, and you're obviously right to pick up on all those important goals. Is there anything, as we're running short of time now, I know you've got to head off sharpish, is there anything you'd like to do in terms of a wrap up, or how you see timings over the next few months for investors and shareholders?
So I think in October, I would hope that we've got a reasonably chunky update in terms of what we're doing and where we are. I think the environment continues to create a lot of opportunities for companies like us. And we're very cognizant that we've got good projects and we want to maximize the value of those projects, but we're also very cognizant that the sorts of assets that are available, the sorts of opportunities that are available, sorts of people that are seeking gas contracts, all these sorts of things are very, very different now to where they were. In the case of gas contracts, you know there's a global gas crisis. There is a shortage of gas. People need gas. So the majors, for example, in Nigeria, they're seeking to export gas because they can access the higher prices through the LNG markets. That means that's creating a lot of pressure on the domestic gas market in Nigeria. The majors themselves have announced over $100 billion in divestments. So I think we're in a very opportunity-rich environment. I think we're a proven and trusted partner, both to vendors, to governments, to future employees. So, an existing employee, obviously. So I think we're relatively uniquely positioned. I don't think there's many companies have our track record of operating in Africa of our size, or our ability to scale up, or our access to capital. So I think it's exciting times for us. And I guess the last thing I would say is that I think that's evidenced by the sorts of people that are joining our business. Last year, we increased our headcount by 25%, industry reduced by 10%. The quality of people that we're attracting as a business is very, very high, and it's something I'm very proud of and very happy about. And that's ultimately what's going to drive our growth, is the quality of the human capital that we have in the business and the ambition that is inherent within that. And I can tell you from the top down, we're an ambitious company. So hopefully we achieve what we want to achieve, and then all our stakeholders should be very happy.
Brilliant. Well, thank you very much indeed, Andrew, for taking time out in Chad to talk to me, and great to speak to you again.
Thank you, Mark. It was good to catch up.
It's an absolute pleasure, well. And yeah, and thank you so much. It's a real joy to have a chat, and hopefully if we'll be back in the studio next time. But thank you very much indeed, everybody, for watching. My CEO interview today has been with Andrew Knott, the CEO of Savannah Energy. Thank you to him and to everybody for watching. Thank you very much, and goodbye.